Ladies and gentlemen, Iraq has just crossed a major financial milestone. For the first time in years, the total currency in circulation has fallen below 100 trillion Iraqi dinars. Now, that number might sound massive, but in central banking terms, it's a sign of big change. For years, Iraq's money supply has been climbing, fueled by government spending, oil revenues, and constant liquidity injections. The economy was swimming in cash. But today, that tide is shifting. So what does it mean? On the surface, fewer dinars in circulation could suggest a stronger currency. When supply shrinks, each unit of money theoretically holds more value. It's the central bank's way of tightening control, signaling that it wants to defend the dinar against inflation, black market volatility, and the overwhelming dominance of the US dollar in daily trade. But here's the twist. A shrinking money supply also means people and businesses might feel the pinch. Less cash floating around can slow transactions, squeeze small businesses, and create pressure in the street markets where most Iraqis live and work. And let's not forget, this drop below 100 trillion is not just about economics. It's about psychology. For many Iraqis, the sheer size of the money supply symbolized how fragile the dinar was compared to the dollar. By cutting it back, the central bank is sending a message. We're serious about reforms, and we want the dinar to mean more. The big question is whether this is just a technical adjustment or the first step toward something larger, like a gradual revaluation or a long-term monetary reform plan.
Ladies and gentlemen, when a country's money supply drops below a historic threshold, it's not just a statistic, it's a turning point. Iraq's currency in circulation has now fallen below 100 trillion dinars, a level many analysts never thought they'd see in the short term. On the surface, it's just a number, but in reality, it represents deep structural shifts in Iraq's financial system, its economy, and even its politics. Let's unpack what this really means. For years, Iraq's economy has been characterized by a flood of liquidity. Oil revenues were pouring in, governments were spending heavily on wages, subsidies, and infrastructure projects, and the central bank was printing dinars to meet those demands. By some counts, the total money supply had been growing relentlessly. But the downside was clear. When too much currency chases too few goods, inflation creeps in. Imported products became more expensive, the black market flourished, and the US dollar became the fallback for stability. So the first key takeaway here is that this drop signals monetary tightening. By reducing the overall cash in circulation, the central bank is trying to restore balance, make each dinar more meaningful, more valuable, and less prone to devaluation. It's an effort to stabilize purchasing power, especially at a time when inflationary pressures are hitting households across the country. But let's not sugarcoat it. A smaller money supply doesn't magically fix the economy. For everyday Iraqis, the immediate impact is mixed. On one hand, if the dinar strengthens, imported goods like food, fuel, and medicine could stabilize in price, making life a little easier. On the other hand, with fewer dinars flowing in the system, cash transactions become tighter. Small businesses may find it harder to operate. People who rely on easy liquidity might feel squeezed. So this is a balancing act, and the central bank knows it. Now, let's talk about the psychology of money. Numbers in central banking are not just about economics, they're about trust. For decades, Iraqis have lived through wars, sanctions, and crises that eroded confidence in their currency. The sheer size of the money supply, over 100 trillion dinars in circulation, was a symbol of weakness, proof that the dinar had to exist in huge quantities just to keep the economy moving. By bringing that number below the 100 trillion mark, the central bank is sending a signal. We're serious about strengthening the dinar, about making it worth more, not less. This is partly optics, but in currency markets, optics matter. Another important angle is the black market. Iraq has long struggled with a dual exchange rate system, an official rate controlled by the central bank and an unofficial, or black market, rate shaped by demand and scarcity. When money supply is cut, the black market reacts instantly. Traders speculate, hoard, and adjust their rates. If the central bank manages this transition smoothly, the gap between official and black market rates could shrink, restoring credibility to the dinar. But if mismanaged, the opposite could happen. Scarcity could drive more people to the black market, widening the gap and weakening trust even further. And then we come to the international dimension. Iraq's economy is dollarized in many ways. Oil, the country's main revenue stream, is sold in dollars. Imports are purchased in dollars. Many Iraqis use dollars as a safe haven. The central bank's move to reduce dinars in circulation can be read as an attempt to align the local economy closer to international standards. A smaller, tighter money supply is more attractive to foreign investors, lenders, and international institutions. It says, "We're taking steps to clean up our monetary system." But international observers will be watching closely. If this move leads to market instability, it could raise questions about Iraq's readiness for bigger reforms. Speaking of bigger reforms, we can't ignore the elephant in the room, the possibility of a revaluation, or RV. For years, there's been speculation about whether Iraq would one day revalue its dinar, pushing it higher against the dollar. Cutting the money supply is exactly the kind of move that would precede such a step. Think of it like pruning a tree before it can grow stronger. By bringing the money supply down, the central bank is making the currency base leaner, potentially setting the stage for a revaluation that would make each dinar worth more. Of course, this isn't guaranteed. It's possible this is simply a measure to control inflation and stabilize the exchange rate. But the timing, the symbolism, and the scale make it impossible to ignore the RV question. Let's bring this back to the ground level, ordinary Iraqis. Imagine a young shopkeeper in Baghdad. He buys goods from Turkey and pays in dollars, but sells to customers in dinars. When the money supply shrinks, he might see two things happen. If the dinar strengthens, he can buy dollars at a better rate and lower his costs. But if the market panics, dollars become scarce, and he has to pay more just to keep his shelves stocked. For him, and for millions like him, this policy shift is not an abstract number. It's a daily struggle with prices, margins, and survival. Now, think about the political fallout. Iraq is a country where economic policy is deeply tied to politics. Every move the central bank makes can be praised as bold reform or attacked as hurting the poor. Cutting currency in circulation below 100 trillion gives the government a talking point. We are defending the dinar. We are fighting inflation. We are protecting your future. But opposition blocs can just as easily flip the script. The government is starving the economy of liquidity, businesses are suffering, and the black market is thriving. In a country where protests over economic conditions are frequent, this shift could become a rallying cry. Ladies and gentlemen, the number 100 trillion is symbolic, but the direction of movement is what matters most. Iraq is signaling that it doesn't want to drown in excess liquidity anymore. It wants to control the money supply, strengthen the dinar, and send a message to both its people and the world. We are capable of serious reforms. The road ahead, however, will not be easy. If managed carefully, this move could stabilize the currency, narrow the gap between official and black market rates, and lay the groundwork for a stronger dinar. But if mishandled, it could fuel shortages, panic, and political unrest. So, what does it mean that Iraq's currency in circulation has fallen below 100 trillion? It means the central bank has taken a historic step. It means the economy is entering a new phase of monetary policy. It means the balance of power between the dinar and the dollar is shifting, slowly but surely. And perhaps most importantly, it means the future of Iraq's currency is not just about printing money. It's about managing it, defending it, and redefining what it's worth. This is more than a number. This is a test of confidence, a test of policy, and a test of the Iraqi people's resilience. And as the world watches, one thing is clear. The story of the dinar is far from over.